What is going on, you guys, and welcome back to the channel. So in today's video, I've compiled up this big mega list of questions from you guys, all related to the TFSA. These questions, by the way, were gathered either in the comment section down below or over on Instagram. I made a post over the weekend and a bunch of you guys submitted some of your commonly asked questions. You'll see there's a huge gambit of stuff. There's stuff on withdrawals, contribution limits, day trading in the TFSA, even some more intermediate questions like if I move abroad, like I'm moving to the US, how does that work with the TFSA? My goal here is to provide some input and chime in on all of the questions and answer them to the best of my abilities. Of course, leave a comment down below if there's more questions that are not answered in this. And if you, of course, have stuff to add to my answers, please do leave it down below, okay? Question number one, is it more important to max out the TFSA or contribute to the RRSP? This is an age-old question, super, super common. I think in general, it's awesome to start with the TFSA, but there are two factors that may warrant doing the RRSP first. For one, if you are a high income earner, so you're in a higher tax bracket, you make lots of money, you may benefit from the RRSP, either doing them in tandem or maybe even the RRSP entirely. And that's because with the RRSP, as you may or may not know, you get a tax break. You get to deduct your contributions against your income. So obviously when you're in a higher tax bracket, that can be very beneficial. With the TFSA, you don't get that, right? TFSA contributions are made with after-tax dollars. There's no such break on the TFSA. So that may skew you a little bit more towards RRSP if that's you. A second consideration would be your timeline, okay? Like when you plan on tapping into this money. Because with the RRSP, I don't mean for this video to be about RRSPs. I just thought this is such a generic question that so many people, ask. With the RRSP, once you put that money in, it is kind of earmarked for the future. And I always say longer term. And the reason being is that when you withdraw from your RRSP, that amount gets taken into your income. You have to actually claim that as income in the year that you take it out. Not to mention, when you withdraw from the RRSP, you don't get that contribution space back. So very commonly, that money is kind of earmarked for retirement when hopefully you're in a lower tax bracket. With the TFSA, you have so much flexibility. You can put money in, take money out. Again, we're gonna talk about this a lot later, but you're not like locking that money. I don't wanna say locking that money away, but it's not as tied up, okay? You can take that as you will, but I think as a default, it's probably not a bad idea to max your TFSA first for the vast majority of people. What is the TFSA contribution limit for 2025? I don't believe this has been announced yet, at least after checking yesterday. It wasn't announced. They typically will announce this closer towards the end of the year. We're just gonna have to wait and see. We are currently sitting at $7,000 here in 2024. I'll pop a grid up on the page for you guys. It's possible that they increase it. The contribution limits are indexed to inflation. So as inflation goes up, they'll often increase it every so often, typically about 500 bucks. I mean, I just saw the inflation numbers this morning. Inflation seems to be under control. I would suspect it's gonna be 7,000, but who knows? They may increase it. We're just gonna have to wait and see. I have a question about withdrawals. If you were to withdraw your TFSA, do you get that amount back for your contribution amount? Yes, you absolutely do. One of the major benefits of a TFSA, you're gonna get that contribution space back in the next calendar year, when the year turns over from December to January. If you invest money in your TFSA and a GIC for a year, and for example, you make $2,000 extra, does that add into next year's contribution? Really, really good question. No, that doesn't affect your contribution room, okay? The gains and growth from your investments, whether it's a GIC or a dividend or a stock or a bond, the gains don't affect your contribution room. The contribution room is for your contributions, right? You put your money in and it could grow to $1 million. If you have contribution room left, you still have contribution left, okay? It's about how much you're contributing into your account, not your returns or your performance on your investments. Here's another one. If the stocks we buy using the TFSA depreciate in value or die, I like the way they said that, or die, does it affect the TFSA room forever, like the existing contribution room decreases? Here's another way of framing this. You max out your TFSA and all your stocks go bankrupt. What is your new contribution limit? Well, I guess it's a similar logic. If you've put your money in and you've maxed out your contributions, if you pick bad investments and your investments go down and they start sucking and in this worst case die or go bankrupt, you don't get new contribution space. That would just be a cheat code if you pick bad investments and then you could top up your TFSA. Absolutely not. If you put money into your TFSA and you max out your contribution room, pretty much whatever your investments do, you've maxed out your contribution room. You got to wait till the next calendar year. to gain new space. So be very careful with your investments. You don't want to pick duds. Best ETFs for TFSA for beginners. I actually just did a video on this recently, no less than a month or two ago. And I highlighted some of my favorite ETFs as of recently, up to date. So those I think would be very suitable if you want to go give that video a watch. Can my wife and I each operate a TFSA? Are the contribution limits shared or individual? The contribution limits would be individual, okay? The TFSA is an individual account here in Canada. There's no shared limits. You each would have your own TFSA, and absolutely you could each operate your own TFSA, and you both would have your own space. And I assume you'd be old enough to have quite a bit of space there. Question from Instagram from Keytree. Can I open multiple TFSA accounts as long as I stay within the maximum contribution? Absolutely. You nailed it. That's exactly right. Some people may want to do this. I don't know why, but some people may want to do this. They may want to have one TFSA here for such purpose, like emergency fund. Some people may want to put a TFSA here for a savings of whatever. You can have multiple. It doesn't multiply your contribution room. It's all under one big umbrella. So she nailed it in her question. Santiago Chapa asks, if I move money from my TFSA to my RRSP, do I get that contribution room back in the next year? Yes, you would. You can almost look at it like you're withdrawing, if you will. You're taking money from your TFSA like a withdrawal. It's just going into the RRSP. You're choosing to, instead of withdraw and spend it or whatever, you're plopping that into your RRSP. You would get that space back in the next year. When you take money out of your TFSA account, do you have to wait until the next calendar year to reinvest that amount? I guess that's on that similar vein. And in many cases, yes, you do if you're maxed out. So think about it this way. Let's assume you have a $50,000 limit. You've put in $50,000. You take money out. You don't have any space left, right? You've maxed out. You've capped out your TFSA, whatever your limit is. Then you have to wait till the next calendar year. But there could be scenarios where if you have a $50,000 limit and you only put in $10,000, you still have $40,000 worth of space this year. If you took out 10, you still in theory could put more back in as long as you're not going over that cap, right? As long as you're not going over your max contribution limit. Again, in the next calendar year, you're going to get it back anyways, plus the additional new year. But just be aware if you have the extra space, you could contribute it. If you're maxed out, you're going to have to wait. How much pay of fees if you hold US ETFs on TFSA account? Are there fees related to the TFSA? Typically, generally, no, okay? So the TFSA is just an account, right? You can think of the TFSA as an account. If you hold an ETF or a product in the TFSA, well, that product may charge a fee. So an MER, typically, if you're holding an ETF, whether it's US, Canadian, international, doesn't really matter. Yes, you would pay the fee of the fund that you're holding or the product, but the TFSA account shouldn't have a fee, to the best of my knowledge. TFSA in Wealthsimple versus the bank. Paris asks, I'm definitely an advocate for Wealthsimple or your favorite brokerage or your online brokerage. I think here in 2024, they're so much more modern, so much more accessible, so low cost. I'm team Wealthsimple, Trade, whatever it is that's your favorite. Not to say that it's terrible with the banks, but I do think they're just a little more clunky. It's a little more old school, if you will. I definitely would go with your favorite online brokerage. Sharon asks, is there a duration like 1 year or more to hold assets in the TFSA, or is it fine to sell profits earlier? Not to my knowledge. You can buy and sell stock definitely under a year. Nothing of that sort. What is prohibited and unqualified investments in the TFSA? Really good one here from Apollo. Well, I just draw this directly from the Government of Canada website. Here we have the permitted investments in the TFSA. Cash, mutual funds, securities listed on a designated stock exchange. That's going to encompass a lot of things right there, guys. Securities listed, so that's like stocks, ETFs, anything basically trading on an exchange. GICs, bonds, and certain shares of small business corporations. To be completely honest with you, I don't really know, I've heard of anybody who's done that. It says here it's possible, but I don't know how exactly that works. Maybe you can leave a comment down below if you've done that or have not, but there's the list right there of permitted investments. If our family savings are in my wife's bank account and I use her bank account to transfer money into my Wealthsimple TFSA, does that affect her contribution limit or mine? Good question. That would affect your contribution room, okay? It doesn't matter really the method that you move the money in, whether it's a e-transfer or a wire or a deposit or this bank account, your contribution room is for your TFSA, right? As long as money's going in, that's what matters. So how you source that, assuming it's legal and everything, shouldn't be any issue whatsoever, but good question. Are Canadian citizens with a TFSA account allowed to hold 100% of their portfolio in US stocks? Absolutely. You can do pretty much whatever you want with your TFSA. as long as it's, the permitted investments, which we just covered. US stocks are permitted, so absolutely no issue with that. Here's one from KM. Great video, referring to my other video on TFSAs. How is the CRA going to know if we are over our limit when they don't do a good job of tracking our contributions over the years? The limit of my CRA account does not appear to be accurate, not even close. I've had so many TFSAs over the years, I could not add up the contributions I've made. And I know exactly what this is referring to, because one of the tips I gave in another video was to always track your own contribution limits. I said the CRA website, if you go in and log into my CRA account, my account, it's not always entirely correct. I do think, however, that if you over contribute, they're gonna find out, they're gonna know. And I don't know that for certain, but I would assume when it comes to collecting, fees and revenue, when you owe them money, they tend to know. They tend to have a way of figuring it out. Don't ask me exactly how. That's not to bash the CRA actually in any way, because in fact, the CRA has actually been quite helpful when it comes to, particularly the TFSA stuff. We actually had a student maybe a year or two back who had came here from a different country, whatever it was, and they had accidentally over contributed to their TFSA, like by a pretty sizable amount. And they immediately reached out to CRA to basically say, oh, I made a big mistake, whatever. And they actually showed them grace and they said, hey, it was just a mistake, whatever. And they were able to, reverse that. And they didn't charge them the fee because they dealt with it right away. So again, not to bash CRA, but I have a feeling they would know for the most part if you're over. So definitely track your contributions yourself. Here's one from, I'm not gonna try and say this name. Thank you for your thorough explanation of the TFSA. One question I have about the day trading part. So day trading in the TFSA. If I use Wealthsimple TFSA and I put money in and set up recurring investment function that automatically buys VOO every day for $5, does this count as day trading? That would not count as day trading. And I do use the recurring feature, by the way, too. It's an awesome feature. I don't do it on a daily basis, but even if you were doing it on a daily basis, that wouldn't be nowhere close to day trading. Like if you are gonna get flagged for day trading, you have to genuinely be day trading in your TFSA. And it's very strange because it's quite ambiguous as to what they look for and what the flags are. Like, you could search and search and search online. I don't think you're going to come to an answer. I think they look at it case by case, but essentially what they're aiming to do is they're trying to deem whether you're using your tax benefit, your TFSA, tax-free savings account. They want to make sure that you're not carrying out business activities, like using this to, essentially professionally day trade, if you will. Again, there's many factors that they look at: volume, frequency, profits, most likely if you're making money. But certainly one trade a day buying VOO for $5, I don't think you get flagged on that. And I said it before, if you are planning on day trading, just use a margin account. You'd probably want to do that anyways for a variety of reasons. But yeah, use a non-registered account in that case. Are dividends from CDRs or Canadian depository receipts stocks taxed with US withholding tax in the TFSA? Super good question. A withholding tax question, of course. The TFSA, broadly speaking, you don't pay any taxes, right? And I'll clarify, it is a tax-free account, meaning you don't have to file anything at the end of the year. You don't have to tell the CRA this. It is a tax-free account. But if you own a CDR, which is a product where the underlying asset is a US or foreign investment, like let's just say it's Walmart or General Mills or whatever, and they pay a dividend, it would be subject to, the dividends would be subject to the withholding tax that we always talk about. And keep in mind, the CDR is a Canadian product, right? It trades on a Canadian exchange, but if that underlying asset is American, there would be withholding tax in that equation. You wouldn't be paying it like I need to go pay it, at the end of the year or again, file anything, but it would be factored in if that underlying asset is US. Which in many cases, or foreign, but US, and in many cases it would be. So short answer to your question, I believe the answer is yes. By the way, if you guys are enjoying this video so far, learning lots, I would highly encourage you to download our app Blossom. It's completely free. Go to the App Store, type in Blossom, there's a link in bio. We've built a social network, 175,000 users now, many of which are Canadian, talking about things like the TFSA, a community of DIY investors who are beginners, more intermediate, a whole mix of people just trying to learn and surround themselves with other investors. Go check it out. I really think you would like it. Like I said, it's completely free and it would be a great way of supporting us and the channel if you're finding this video helpful. In finishing off, can you transfer from a non-registered account, company shares of XYZ holding, to a registered account TFSA with an in-kind transfer and not be penalized to do so? Here's another version of this question, in my opinion. If one transfers a stock with an unrealized market gain, into a TFSA, does one incur any taxes on this transaction? Super, super good question here. Basically saying, can we go from a non-registered or taxable account into our TFSA, whether that's a transfer of some sort? What happens with the gains on that? And the answer is you absolutely can do that. And I think a lot of people do actually, whether they earn new space in the new year, or maybe they just have a bunch of untapped TFSA space. Why not take that taxable money and put it into the sheltered plan? Super logical idea. But if you have a gain, like one of your stocks is up 20, 50, 100%, that's unrealized, when you make that transfer, that would trigger essentially the sale of that security, and it would lock in that gain. Because think about it logically, like you're investing in a taxable account and your stock's done super, super well. You're going into a tax sheltered plan. You have to pay the gain on this stock, right? So it's equivalent of you selling it, if you will. If you do an in-kind transfer, it will just trigger that. Whatever that capital gain is, you'll have to include that in your taxes. And I guess now it's 66% inclusion rate, no longer 50. But you would have to factor that in. One thing that is worth mentioning regarding these transfers, and this is a scenario that's, I guess, a good tip, is that if you have a loss, so like an unrealized loss, one of your investments is down bad, however much, if you do that same transfer, you don't get to carry over that loss. In fact, if you just did a transfer, you would just actually lose that loss. It would like evaporate into thin air. And losses, as you may or may not know, can actually in some ways be valuable to us as investors. Because if we sell at a loss in a taxable or non-registered account, we can use that loss to offset our future gains. It can actually help us save on taxes. So it's not terrible. But what you have to do in this scenario is actually sell your investment first before moving the money into the TFSA. So essentially trigger or solidify that loss. If you want to capture that loss, then just move the money over into your TFSA. Does that make sense? If you do it just as a transfer, that loss just evaporates into thin air. Don't ask me why. I'm sure there's a very good valid reason, but that's just how it is. Gains, you'll have to pay tax on, but the losses just evaporate. So if you have a loss and you do plan to make that transfer, solidify it first. One thing to be aware about, of course, is the 30-day period. You don't want to, bypass the rules for the superficial loss rule, superficial loss rule. You'd have to wait 30 days to buy that security back, or you could just go ahead and buy something very similar, or like a slightly different asset, or just wait past the 30 days. You can do some research on that as well. And to finish off this video, I'm going to bunch these last few ones together. They're all in the same vein, but I am currently in Canada, but I'm thinking to move to the USA. Do I need to open my TFSA? Can I contribute to a TFSA as a valid Canadian resident and then leave next year? Would that cause any issues? I'm not planning to contribute to my TFSA while I'm not in Canada. My daughter works in the US. Is she allowed to buy TFSA? I will say this, guys, I'm not like overly experienced. And in fact, I had to freshen up and do a bit of research to get these answers. So do your own research yourself, because this is something I just don't commonly deal with all too often, but I know it's a very common question. Basically, in general, if you are a Canadian resident, you're living in Canada and eligible, to answer your question, Perwinder, I would encourage you to open the TFSA and maximize it as much as you can. Because a lot of people, they have plans to, go to the States. It might be a year from now, it might be a few years. You never know when that actually pans out. In the meantime, take advantage of the TFSA. Now, if you do leave Canada, I think a major question you have to ask is, how long are you going to be gone for? Is this a temporary thing? Like, oh, I'm going to go for a year, 2 years, 3 years, and then I intend on coming back into the country and being a Canadian resident? Or am I leaving for good? Like, I'm going to go become an American and go live down south? Because by answering that question, you have two very different answers. If you plan on leaving temporarily, you can absolutely leave your TFSA open. So let's just say you've banked up a bunch of money, $50,000, $100,000, you've earned your TFSA, grown it. You don't have to shut that down. It's just that when you move abroad, you cannot contribute to your TFSA. You're not going to be earning space. Think about this. If you don't have like a Canadian residency, you're living elsewhere, you don't get those benefits, but you don't have to shut down the TFSA. And maybe in a few years you come back, you can kind of do your thing and reactivate it, if you will. Just kind of leave it stagnant. One major thing to be aware about is that in the eyes of the US, they don't view the TFSA the same way we do. They don't have the same amount of respect for the TFSA. They almost treat it like a normal investment account. And if you plan to be there and be more active in your TFSA, I would more than certainly suggest or, point you towards getting an actual accountant that specializes in this stuff, because there's all sorts of forms which will pop up on the screen which I've never ever heard of. Like, this is beyond my pay grade. But given that they don't recognize the TFSA as this tax shelter plan that we're used to, and they treat it like more or less a normal investment account, if you're earning dividends, if you're earning capital gains, the investments inside that account absolutely can factor into your taxes while you are in the US and essentially being an American. So in that case, I would say, speak to an accountant, but you can leave it open. Again, they'll probably direct you better. If you intend on, moving away from Canada for good, like for the long term, the general wisdom is to probably just close the account. Like, it's not worth all of this headache that I kind of just went through with all these different forms and accountants. You probably might just want to liquidate the TFSA, take the money back, take the cash back, bring that over to the States with you, and then open up like a Roth IRA if you can become, if you're an American resident. Because yeah, that just seems to be the lot more simple answer based on the research I've done. Like I said, I haven't done that before. I've only ever lived in Canada, so I'm not really speaking from experience there. But based on the research I did online, that seemed to be the general consensus. If you're leaving and don't really intend on coming back, or you're not sure, maybe best to just shut down the TFSA and then go use one of their products to avoid all the taxes and complications and headaches. If you do intend on coming back for a shorter or more temporary period and coming back to your Canadian residency status, you then can leave it open. But again, regardless, it probably doesn't hurt to go speak with an accountant in that situation. You don't want to find yourself pissing off the IRS or whatever it is just because you didn't really know what to do. And definitely, if you are leaving for good, I would close it before you leave Canada. Because again, if you close it while you're in the States, they may view that as, like a more or less a normal tax investment account, and then you may be liable for some sorts of some costs, to put it simply. In general though, guys, hopefully that did answer some of your questions on the TFSA. Did you guys know a lot of those answers? Did you agree with them? Did you disagree with them? Let me know down in the comment section below. Again, if you guys have more questions beyond this list, leave them down below. Give them thumbs ups so that they'll kind of bump up to the top of the list. And maybe I can do a part 2 if you guys would like to see that as well. But as always, thank you guys for watching. Hope you enjoyed, and I'll see you in the next video.